Hi, my name's Andrew. Thank you for visiting my YouTube channel. This is another video in the series on real estate fundraising, and this video concerns investor screening and response strategy. It is a great video if you're just starting to raise funds for your real estate project. I have another couple videos in the same series dealing with due diligence and other fundraising initiatives, so hopefully it's got some good information for you. So this is part of the fundraising due diligence process tutorial that I am preparing for clients. So this concerns how to effectively manage the investor response process. So a lot of the details in this video come out of my real estate capital fundraising guide and my due diligence guide. These are two guides that I created for real estate firms to help them with the fundraising process. They're both around 75 pages each, so most of the information from this video comes from the Ultimate Guide to Raising Real Estate Capital. So before we get to the video, this is just a really quick look at the Ultimate Guide to Raising Real Estate Capital. This is a comprehensive guide with absolutely everything in it that you need if you're a first-time fundraising, anywhere from $10 million to $100 million. This is ideal for real estate companies who really want a bit of a guideline of how to manage the process. Absolutely everything in here, from corporate to legal to due diligence, and it's all part of a package that I created specifically for real estate companies in 2025. So let's just get started. So the first step, once you start to receive responses for your campaign, is to evaluate the inquiry and conduct initial research. So first of all, you want to analyze the response. Are they requesting detailed financials or additional documents? Are they proposing a meeting or call? And do their questions show clear interest in key project aspects? You want to identify seriousness. You want to look for detailed, well-informed inquiries as a positive signal. So it's really important when you first start to go out to the market. You're going to get a number of responses, hopefully good responses, but you're going to get ones that you're not quite sure of. You're not quite sure of the intent. Are they just people looking to get information on what's happening in the industry? Are they your competition? Are they people contacting you because they want to try to get a job or try to come online with you to help with the fundraising, looking for fees, and so on and so on. So that's why you have to do a little bit of research before you start giving any information away. So one thing you can do is use a Know Your Client document to vet the investor. Sometimes that's a little bit forceful in front of clients. It really depends on what type of assets that you're trying to raise capital for. The purpose of this is a structured approach to confirm alignment with your project. Key elements, current assets and portfolio. You want to get a summary of their holdings and asset types. You want to know when their latest acquisition is, and this could be a form letter as well. Company details. Generally, if you're going to get a response online, you're probably going to get name, website, and contact information. So that's just basic sometimes you get these blind emails from Gmail accounts, so you're going to need to do a little more digging. I always like to get some information on the key leadership, CEO, directors, with their LinkedIn profiles. Investment focus, I want to know their preferences for property type, risk, and location. And references, mutual connections, or past collaborations. That's one you can think of. It doesn't necessarily need to be part of that first touch, but sometimes it's good to know who they've collaborated with. Maybe that's a better way to structure that. So tips: customize the KYC document for your project and maintain confidentiality. And this is something that can be just punched out in a form email on the return. You're going to personalize the first part of it, of course, and then just say, please see attached document. You know for sure that whoever sends that back is going to be serious. If they don't send it back, then there's probably not really too much I would do to follow up with them. Next is conduct your own supplemental research, verify investor details, cross-check KYC data with public records, websites, and press releases, review LinkedIn profiles and leadership and credentials. Red flags, well, lack of transparency or vague responses, mismatched investment focus, or a limited relevant history. For example, if they claim interest in commercial real estate but have no deals in that sector, you want to investigate further. It doesn't necessarily mean that you're going to rule them out. It could be a directive from their management to say, hey, we've got enough residential, we need to focus on commercial or hospitality. That happens. One of the things that I like to do is, and this happened recently with a client of mine who was trying to set up a meeting with a potential investor. Well, what I did was I did a lot of deep research on the investor, and they had been involved in a lot of personal lawsuits. Wasn't related to their current business, it was related to another business, but they seemed to have had a bit of a history with suing third parties. So most of the time you're going to be able to get more information. Whatever they give you is almost always going to be friendly, clean, and positive information, but you can do a fair bit of digging on your own to find out whether the person has maybe some skeletons in their closet. And next is preparing for follow-up engagement. So you want to, again, craft a tailored response, acknowledge your interest, share the requested information like financials or timelines. These are, again, going to be items that you're going to have to decide on how you want to communicate with the first touch. Remember, there's financials that you may want to get from them as well as sharing your own. Many years ago I worked in the Middle East, and one of the types of projects I was attached to was the hospitality sector and large-scale assets as well, and we were marketing an asset that was over $100 million, and we needed to know from the client a bit about their financial history before we started to divulge ours. Most of the time, any client that's looking at an asset in around the $100 million range is going to have public audits, or they're going to be able to supply at least one or two sheets that show that they have the ability to acquire an asset of that range. Remember, this is not very different than going to a bank and you're looking to get the information from the client on their capacity to be able to afford this type of asset. Could be a simple email saying thank you for your response, attached are specific documents, let me know if you need additional insights. Remember, you're not trading anything confidential in the very beginning. In fact, anything that you give to them is something that you would already have on a website or some sort of other investor forums. So again, it's just to start that engagement. So you should also include the next steps in your response. Remember, the first part is just touchy-feely, getting to know each other. The next part could involve something more structured. You may want to request an expression of interest. Ask if they'd like to send one in. Well, what does that really mean? Of course, it's non-binding. Same with a letter of intent. It's usually non-binding. So what's the real purpose of it? Well, it just basically means that somebody from their company has to send out a letter with their letterhead. Has to be somebody with the responsibility and the ability to take it to the next steps. It just allows you a little bit more formality. If they don't send it in, again, then it's generally something that I wouldn't even really spend a lot of time following up on, because it's something that they didn't take seriously either. And then you want to schedule a call, propose a 30 to 60 minute discussion. Pretty common these days, and you want to clarify the process. You want to outline the steps. Remember, once they send in their expression of interest, you're in the driver's seat, and that's when you're going to have to set out the steps like detailed review, term sheet negotiation, and more. You want to let them know what the process is, and there's nothing to be concerned about there. In my previous videos and in my guide to real estate fundraising, I have that all outlined to give people an idea how to handle that. Pro tip, keep communication professional and clear to build trust. Create urgency without pressuring the investor. Remember, they don't know how many people are interested on your side, and you want to keep that reasonably confidential in the early days. So the best way to do all that is to prepare the internal documents in advance. So you want to have the detailed financials. Of course, these are going to be in the data room, the due diligence part. again, part of my previous video and my guide to due diligence, which is 75 pages. I teach clients how to do everything right from the very beginning, how they should be organized and how they should be released. Draft term sheet, LOI template, they should be all customized documents. Supporting docs, appraisals, market analysis, and CapEx plans. Of course, pro tip, organize in a secure data room for seamless sharing. One of my clients previously told me that they got into a little bit of trouble with a potential investor and some of their confidential information was given to them, and they were concerned that maybe that was going to land in the hands of their competitor. It was proprietary information having to do with the technology. My comments to them were that information should never have been released until you're at the MOU level. Most of the information about the project had to do with, okay, we have this great project, we're going to be able to deliver this to you, and the real proprietary information that made all this sort of possible for the client should never have been released. And so what I do is I can teach people within your organization how to control that because it should be released in steps. Then you're going to monitor engagement and follow-up. Obviously, by this time, there's somebody appointed on the client side to handle this. Generally, there's a team in the fundraising part, and I like to always say there should be no heroes in this other than the founders and the key people. So once you're getting to the point where you're bouncing MOUs and LOIs back and forth, that should really be the principals, the people that are part of the fundraising team, unless it's the head of fundraising. They're there to help you get this done. They're not supposed to be up front. They've done their job. They step back and help facilitate this. So one of the key engagement metrics you want to know is, did they open your email or access the data room? Are they responding to meetings and further questions? I always like to use the data room as a barometer to find out how many times they're opening it up and looking at the key documents that we've already given them approval to look at. If they've looked at them just once, okay, and they've not asked any questions, my sense is they're probably going to be a little further down on the interest sector. If somebody's looked at 4 or 5 documents, including financials, project plans, maybe sale and purchase agreement or some other terms, if they've looked at them a number of times and a couple other people from their team have looked at them, that's telling me they're really taking a good look at this, and that's going to help you out because that's what you want to know. You want to make sure you get back to them and say, hey, we noticed that you've had a few looks at our financials, or anything we can do to help support them or answer any questions. It's a great way for you to engage in the next step. Follow-up timeline, if there's no response, reach out to them within about 3 to 5 business days. But this is really, really helpful. It helps take those 10 or 15 responses that you're dealing with and narrow it down to 1 or 2. In fact, you can even use that as part of your negotiation. You can say, listen, we've got a number of responses. Right now we're engaging with 2 of them, and we've given them 30-day exclusivity to look at the information further. And then if you're not in that, you might say, well, let me know, we're really interested, and it helps sort of move people up and down in the pecking order when it comes to their interest. And lastly, closing. Build relationships with professionalism. A structured KYC process ensures the right fit for your project. Professional preparation and follow through build investor confidence. And stay tuned for insights on investor calls, negotiating team sheets, and closing deals. So it's a really key. By this point in time, you only probably have 1 or 2 key people in the company that are dealing with the investor or the investor's core team. It could be the investor themselves. It could be private equity group. But by this time, if you're part of the fundraising team, you've done your job as long as the principals are having constructive communication. So in most cases, for these type of scenarios, I've just taken a look at the part when the investor responses have been coming in, but as in my previous couple of videos, from the start to the finish, it could take anywhere from 9 to 12 months. I usually tell clients from the from the moment we have the initial kickoff meeting, once you've appointed us to help you with the fundraising, factor in 9 to 12 months before you end up getting your final investment, depending on the project complexity, investor responsiveness, and external factors. I hope you enjoyed that video. Just a quick bit about myself. I'm a fundraising strategist with 15 years of experience in high-end real estate sales and marketing spanning Canada, Dubai, and the Caribbean. And over the last 3 years on Fiverr, I've assisted over 300 clients with startup fundraising, pitch deck refinement, investor outreach strategies, and custom investor databases. In addition, I serve as an advisor to a New York-based private equity firm with capital commitments of $10 billion. This capital is strategically allocated to projects across the Middle East, Asia, and the USA, with a focus on income-generating real estate. The firm offers both debt and equity financing with investment sizes ranging from $10 million to $100 million per project. You can get more information about my background and services by clicking my Fiverr link below. Thank you for watching this video. Please like, share, and subscribe.